This paper aims to enhance the understanding of which factors affect the price development of Bitcoin in order for investors to make sound investment decisions. Previous literature has covered only a small extent of the highly volatile period during the last months of 2017 and the beginning of 2018. To examine the potential price drivers, we use the autoregressive distributed lag and generalized autoregressive conditional heteroscedasticity approach. Our study identifies the technological factor hash rate as irrelevant for modeling Bitcoin price dynamics. This irrelevance is due to the underlying code that makes the supply of Bitcoins deterministic, and it stands in contrast to previous literature that has included hash rate as a crucial independent variable. Moreover, the empirical findings indicate that the price of Bitcoin is affected by returns on the S&P 500 and Google searches, showing consistency with results from previous literature. In contrast to previous literature, we find the CBOE Volatility Index, VIX, oil, gold, and Bitcoin transaction volume to be insignificant. The market value of Bitcoin has grown tremendously in 2017. As the market values of cryptocurrencies grow, it is reasonable to assume that they will start having an effect on certain economies. By estimating the price drivers during the period ranging from 2013 to 2018, this paper will assist investors in making sound investment decisions and aid in the understanding of what drives this phenomenon's price fluctuations. Cryptocurrencies are decentralized digital currencies that use encryption to verify transactions. In 2008, Nakamoto, 2008, released his paper describing Bitcoin. In January of the following year, Nakamoto released the software that launched the Bitcoin network. As of 2018, Bitcoin is the most commonly known and used cryptocurrency. Since its founding in 2009, the price of Bitcoin has risen from US$7 to an all-time high of $20,089 on the 17th of December 2017, Quandl.com. At this point in time, its market capitalization was approximately $336.4 billion. From January 2017 through December, Bitcoin increased by 1,270%, and the total cryptocurrency trading volume passed $5 billion a day. Interest from the mainstream media, regulators, and the public and financial markets accelerated so much that some call this period Bitcoin's IPO moment. Forbes.com 2017. During 2017, Bitcoin garnered more focus from institutional money, hedge funds, and public funds. Its success culminated with the approval and introduction of Bitcoin derivatives due to the exponential rise in attention. We have included two sub-periods to test if the factors have been the same before and after 2017. We believe that it is important to understand the underlying factors affecting the price of such a highly volatile financial phenomenon. Just as the price of Bitcoins has had an exponential rise in the past year, the academic literature on Bitcoin and cryptocurrencies has experienced a similar increase. Previous literature has used macroeconomic, technological, and publicity factors in Bitcoin models. Aalborg et al. 2018, Buwayor and Selmy 2016, Cian et al. 2016, Garcia et al. 2014, Christoufek 2013, 2015, Carland et al. 2018. However, few academic studies include data that reflect the price fluctuations that Bitcoin experienced in 2017 and 2018. This paper addresses this gap in the literature by assessing what variables drive the price of Bitcoin. As Christoufek 2015 noted, because of the dynamic nature of Bitcoin and its rapid price fluctuations, it is logical that the drivers behind the price will vary over time. Therefore, we have chosen to analyze the drivers yet again. To estimate the short and long-term effects of potential price drivers on Bitcoin, an autoregressive distributed lag (ARDL) and generalized autoregressive conditional heteroscedasticity (GACH) model is estimated. We find hash rate to be an irrelevant variable due to the deterministic feature of the Bitcoin supply. The supply of Bitcoins are not dependent on price, as a normal good, but instead the supply of Bitcoins are given by the Bitcoin code and solely dependent on time. Consistent with the previous literature, we find that the S&P 500, Google searches and last week's return on Bitcoin to be significant explanatory variables, while gold, oil, CBOE Volatility Index, VIX, and Bitcoin transaction volume are found to be insignificant in the estimation period. Several studies focus on the key concepts of cryptocurrencies and particularly Bitcoin. Becker et al. 2013, Brandvold et al. 2015, Dwyer 2015, Nica et al. 2017, Segendorf 2014. According to Dwyer 2015, the major innovation in Bitcoin is its decentralized technology. Instead of storing transactions on a single or set of servers, the database is distributed across a network of participating computers. Bohm et al. 2015. This database is what is called a blockchain. Blocks are added to the chain in the process of mining bitcoins. The process of mining revolves around solving complex computational puzzles, and the incentive for miners to participate are transaction fees and Bitcoin rewards. To solve these puzzles, miners need computational power, which is measured by the hash rate. The hash rate is the speed at which a computer can complete an operation in the Bitcoin code, while the mining difficulty refers to the level of complexity in the computational puzzles and is directly correlated with the hash rate. As the hash rate either increases or decreases, the underlying Bitcoin algorithm adjusts the mining difficulty so that the supply of Bitcoins follows a predetermined path. 1 new coins are generated approximately every 10 minutes independent of the current price, meaning that the Bitcoin supply is inelastic and time-dependent, as shown in Figure 1. Since the supply is solely dependent on time, we choose to classify the Bitcoin supply as deterministic.